Individual stocks, HCLTech. Let's look at this one and the big disappointment coming in. Of course, we got to know this immediately after the numbers came out, and Reema was telling us even on Friday the issue was that the company's guidance has not gone down too well. They're sounding very cautious about going forward. So Reema, 3 to 5%, and you spoke with the management as well.
Yeah.
Even in terms of what they're saying, they're not exactly talking about, when things will turn around now, or are they?
So they have said that we have assumed the discretionary spending environment remains exactly as it was in FY24. At no point of time in FY25 are we assuming any change. This is what the picture is today. There is a rundown seen in discretionary project. Whatever they've seen in FY24, they expect that to continue at least for the next 12 months, and that's what the guidance bakes in. But the street is disappointed, because we were anticipating at least a 5 to 7% top line revenue growth. In comparison, the company is guiding for 3 to 5% growth. Therefore, now street estimates have to be lower. As I said earlier, the street estimates were closer to 7%. Right, 6.5 to 7%. Now they've been brought down between 4 to 5%, between the company's guided band. Now, why is the company guiding for this? One, they're saying that there's a very large project which is moving offshore. Basically, it was serviced onshore by their employees sitting in, the foreign location. Now it'll be done by the Indian employees sitting in India. When that transfer happens, usually there's a cut in revenues, right? Because offshore projects can be done at a cheaper rate. That's one. Secondly, there are, productivity benefits which are passed on to a client, maybe every year or maybe every few years. So that's another factor. And third, there was a State Street JV which the company exited, and that will have an impact of 80 basis points in Q2. In Q1, the company is saying revenues will fall about 2%. Now, because of all these factors, the company has come out with a guidance. Now, for HCLTech, and it will be one of the few companies where FY25 revenue growth will be weaker than FY24. Everywhere else, the management, TCS said that categorically, that we expect FY25 to be better. Infy's guidance seems to suggest a pickup in growth compared to what they did last year, but not for HCLTech. Margin guidance on expected lines, 18 to 19% last year. But the management said that the aspiration of 19 to 20% margin has been pushed forward. MK and HSBC have both downgraded the stock post the miss in Q4 and the muted guidance. Jefferies has lowered the target price to 13.90. They say weak growth caps the upside, but a high yield limits the downside, which is why they have a hold rating. Nomura, Kotak too have brought down revenue estimates, EPS estimates, and therefore even the target price on HCLTech.